Hello, today is November 4th, 2024. Just making a quick video out here in Knoxville about a few stocks that just had earnings this week and did exceptionally well, and a couple stocks that disappointed. Hopefully you're able to take advantage of the moves and make a nice profit. First stock I'd like to talk about is Carvana. It beat earnings and was up as much as 25% at one point, and just beat all expectations. The basis points, we had 50 basis point cuts last month. Carvana actually went up 7%, and as everybody knows, we've got another rate cut coming up later this week. I would expect to see Carvana to repeat and have a 7% or better gain. It's currently trading at $226.50 a share, and it's a strong buy. The next company is MicroStrategy Incorporated. We talked about this company last week as well, and it dropped as predicted. The stock actually dipped all the way to $222 a share. It's a great opportunity to buy before rate cuts. If you shorted it this week, congratulations. But if you didn't, you missed out. There's still plenty of time to make a ton of money just by owning this company for the last part of this year. I would hold through the Christmas rally. There's a ton of money to be made in both of those companies that I've just talked about. Third company is my favorite, nvda. It's set to make another nice gain. It's currently trading at $136.08 a share. This company last time made a great gain right there at the basis point cut. It was up. It went up over 3%, and it's definitely going to do the same this time. I've been loading up on nvda at $136.08. It's a strong buy. Next company, Eli Lilly. As everyone who watches my video knows, I own several shares of Eli Lilly. It actually had a disappointing earnings. It's currently trading at $8.04 a share, and I have a hold on this stock. It should rebound nicely over time, but its earnings were still very disappointing. I should have sold at $9.20 in the pre-market, but I didn't. So basically, I'm just holding in Eli Lilly for the long term. It's up over 750% in the last 5 years, and continues to outperform the market. So it's nothing to worry about, but you'd still like to see that stock do a lot better than it's done. Next company is Spotify, currently trading at $377 a share. Great place to buy Spotify. I advise day trading this company at $377 and selling it every time it goes to $385 or above. Stock's excellent company to own long term as well. Personally, I believe in always buying the dip with any of these companies. And at $377, that's a great opportunity to make a nice profit. Next company is Blackstone. It's another stock that's up 86% in the past year. Blackstone Incorporated just continues to outperform the market. If it falls to $168 a share, it's a strong buy for me. Every time it goes back up to around $173, I would sell it. This company's always making headlines and front page of the news. That's what I love about Blackstone. Also, every time we have a market correction, Blackstone holds its value. nvda might be down 9%, as well as other tech companies just falling 5 or 10% or more, but Blackstone is holding its value, and that's what I love about Blackstone. I've made over $3,000 in Blackstone this year, and it's a great company to own long term as well. Its CEO is one of the best in the business. So he definitely knows what he's doing. This Blackstone's one of those companies that I picked in 2023 to outperform the market, as well as Eli Lilly, nvda. All of them done it exceptionally well this year, and should continue to do well through rate cuts and into 2024. The last company on my watch list is Amazon. It's another company that had an amazing earnings report this past week. And looking at its chart from the 1 day to the 1 year chart, it's green all the way through, and that's what I look for during a bull market. You know, it shows that the company that you're looking at has stable growth. And I would say that you know, Amazon will continue to climb higher all the way through the Christmas rally and into January. Can't go wrong owning Amazon. Also, another thing that I always pay attention to is PE and forward PE. Company's forward PE needs to be lower than its current PE. You know, ideally you'd want it to see, if it has a current PE of 100, you'd want to see it at a current PE at 100, mean a forward PE of 50. Usually, you know, with these large cap companies, that's not always possible, but still, it should be. It shouldn't be really close. If you look at like Apple, for example, you'll notice that Apple or Meta, either one, both have current P's and forward P's that are only a couple dollars apart. You know, for example, if a company has a P of 20 and a forward P of 19, they're not expecting a lot of growth in the next quarter. So not exactly be too thrilled to invest in a company like that, because you're not going to expect a lot of growth over the near term. But if it's you know, has a P of 100 and a 4P of say 50 or 75, that right there would be a great opportunity and shows the company's growing extremely quickly. Another thing to pay attention to is the EPS, which is earnings per share. If you see a negative sign by the amount, it's the company's actually losing money, and that's something that I personally would advise against investing in. You know, if you look at any of these companies, nvda, Eli Lilly, Blackstone, Amazon, all, you know, make nice profits, and you know, there's nothing wrong with investing in a company with a negative EPS. If you're going to day trade it, like MicroStrategy has a negative EPS, you know, I advise just day trading it. You know, every time Bitcoin and Ethereum goes up, you know, MicroStrategy Incorporated is going to go up as well. Same thing with Coinbase. But I don't want to own those companies long term until they turn a profit. If you try owning a company that has a lot of hype like that long term, you're setting yourself up for disaster during a recession. So always take profits with companies if you have to own a company with a negative EPS. Appreciate everyone watching this video. Please hit the like and follow button, trying to get this account monetized. You know, you can get a free referral link in the comments below from Webull. It's totally free. Webull is my favorite brokerage because you can trade between 4 a.m. and 7 a.m. Eastern, and that gives you a big edge over companies like Fidelity or Charles Schwab or TD Ameritrade. You know, all great brokerages, but you know, really, to stay on top of everything, you need a company that's open between 4 a.m. and 7 a.m. You can't really trade NVIDIA or something to 7 a.m. You've missed out on huge profits. And if we have some bad news with, you know, something to do with just chips in general, you know, NVIDIA's fell more than 9% twice this year. You've got to have a brokerage like Webull to protect your principal. That's huge in investment. So even if you have Charles Schwab or Fidelity or something else, I would at least consider Webull. Click a referral link, you get a free stock. If you don't like it, you don't have to keep it, but it's just a suggestion. I appreciate everyone watching my videos. I'll make another video next week. I hope everyone has a very profitable week. This week's the Fed rate cuts, so hold your investments through the rate cuts and be sure to take profits. Enjoy your week.